All right, today we are digging into a project that is, well, almost unimaginably huge, the Rio Grande LNG facility. And we're going to use NextDecade's own corporate presentation as our roadmap here. We're going to find out just how in the world you built a $30+ billion energy giant, basically from scratch.
I mean, that really is the big question, isn't it? How do you even start something like that? We're not just talking about, a big factory. This is one of the largest, most expensive construction projects on the entire planet. And the answer to how it gets built, well, it tells this really fascinating story about where our global energy supply is headed.
So, where does a project like this even begin? Well, it all starts with demand. Take a look at this chart. Now you can see overall gas demand is going up, but the real story here is in that orange part of the bar, LNG. Its slice of the pie is set to nearly double by 2030. So the world isn't just using more gas, it's demanding way more gas that can actually be shipped across oceans.
And that global demand is the perfect lead-in to our first section here. Before we can really get into the nitty-gritty of one specific project in Texas, we've got to understand this worldwide thirst for gas that makes it all possible in the first place.
Industry experts have a name for this surge in demand. They're calling it the third wave of LNG supply. The first couple of waves, they came from places like Qatar and Australia. But this new wave, it needs a whole new generation of mega projects to keep up. And, yep, one of the absolute biggest is taking shape right on the U.S. Gulf Coast.
All right, so let's zoom in. We've seen the global picture. Now let's focus on a specific player in this new wave, the Rio Grande LNG project, which is being developed by a company called NextDecade.
Okay, first things first, let's do a quick primer just in case you're new to this. What exactly is LNG? Well, it's pretty simple actually. It's just natural gas that's been super chilled, down to about -260 degrees Fahrenheit. When you do that, it turns into a liquid and, get this, it shrinks its volume 600 times. That's what makes it possible to load it onto these massive tankers and ship it all around the world.
So you might be wondering, why here? Why near Brownsville, Texas? Well, the location is absolutely key to the whole strategy. First, it has pipeline access to two of the world's biggest gas fields. We're talking the Permian and Eagle Ford basins. And second, it has direct access to the sea from a port that isn't all clogged up with traffic. The plan right now is for 5 of these huge liquefaction units, but they have enough space on site to potentially double that to 10. It's massive.
And the price tag for making this vision a reality? Over $31 billion. And that's just the fully funded amount for the first 5 production units. I mean, it's an almost mind-boggling number, right? But it really shows you the sheer scale of belief and conviction behind this project. Okay, so the location is locked in, the money is in the bank. But that just brings us to the next massive question. How do you actually physically build a multi-billion-dollar project this complex? Let's get into the nuts and bolts of it.
First, let's clear something up. You're going to hear the term train a lot, and it's not what you think. We're not talking about locomotives. In the LNG world, a train is basically a massive independent factory unit. It's a whole assembly line that takes in natural gas from a pipeline, runs it through this crazy refrigeration process, and spits out that shippable liquid LNG. And the Rio Grande project? They're building 5 of these factories right next to each other.
And here is the construction schedule they're working with. The big thing to notice here is the staggered timeline. See how it's not all at once? Train 1 is set to start producing LNG in 2027, and then the other trains come online one after another, all the way through 2031. And this is actually a really clever way to do it, because it means the project can start making money years before the whole thing is even finished.
So how's it going so far? Well, according to the company's own presentation, things are moving along really well. They're reporting that it's all progressing safely, it's actually ahead of schedule, and it's on budget. And you can see some of the big milestones they've already hit, like raising the roof on a massive storage tank and getting major equipment for the first 2 trains set up. This isn't just a blueprint anymore. This is a very real, very active construction site.
All right, let's talk about the money. I mean, a $31 billion price tag can feel a little abstract, right? So in this next section, we are going to break down exactly where all that cash is coming from.
Okay, but before we dive into the charts, there's a key financial term we need to get our heads around: non-recourse debt. Here's what that means in simple terms. The loans are backed only by the project itself. So if, worst case scenario, the whole thing goes belly up, the lenders can seize the facility, but they can't go after the parent company, NextDecade, for more money. It's a really common way to wall off the risk on these gigantic infrastructure bets. Okay, so here's the breakdown for the first and biggest phase, which covers trains 1, 2, and 3. Of that huge $18 billion pot, you can see that just over half of it is a pretty standard term loan. But look at that other huge slice. About a third of it is equity. That's the skin in the game money. It means major partners are writing huge checks and making direct investments. Now, the funding for Train 4 is structured a bit differently. It's a much simpler package, really. You can see it's almost a 60-40 split between debt and equity. And that 42% in equity, that shows a really strong continued commitment from those direct investors.
And finally, let's look at Train 5. The structure is pretty similar, but you probably notice there's a new slice in the pie here, USPP. That stands for U.S. Private Placement. Basically, it's debt that's sold directly to big institutional investors like insurance companies or pension funds, instead of on the public market. It just goes to show how they're tapping into all these different pools of money to make this happen.
So, the money is all lined up, and the construction crews are hard at work. But what's the payoff? What's the whole point? Let's zoom back out again and take a look at the long-term financial projections for this absolute beast of a project.
Okay, this table gives us a peek at the projected financials once all 5 trains are up and running. Just look at that top line. That's an estimated $2.1 billion in cash flow that can be distributed every single year. Now, that cash gets split up between the equity partners and the parent company, NextDecade. But notice something interesting. See how NextDecade's share jumps up in that second column? Why does that happen?
Well, the answer is something called the flip. And this is a really common setup in these huge infrastructure deals. Basically, once the initial investors, the equity partners, have gotten their original investment back, plus a certain amount of profit, the deal flips. And when that happens, the developer's share, in this case NextDecade's, of the cash flow goes way up.
And this chart right here, this shows the ultimate vision. Because those first 5 trains, they're really just the beginning. The company projects that every single additional train they build could add over $600 million more in cash flow per year. So if they build out to, say, 8 trains, they could boost the project's total cash flow by a staggering 85%. Just incredible growth potential.
Which, brings us right back to the big picture. With global energy demand continuing to grow, projects on this massive scale are positioned by their backers as a kind of critical bridge to the future. The idea is they can provide huge amounts of energy while the world figures out this really complex long-term energy transition. And that leaves us with the multi-billion-dollar question, doesn't it? How big of a role will projects exactly like this one ultimately play in our energy future?